Before I start on my presentation, I also want to tell you we've started a very new initiative where we are hiring CA moms, right? So we're looking at hiring 8 CA moms. So if you have anyone in Oman or any of the GCC countries, do spread the word. As far as India goes, the criteria is simple. You need to be a chartered accountant, you need to be a mom, and you need to be from a tier 2 or a tier 3 city. The reason is a lot of women who don't find employment opportunities in tier 2 and tier 3 cities. So we thought we'll work part-time with them and we will give them an opportunity to this. I have a presentation here, but I don't want to bore you with the presentation. I really don't want to bore you with the presentation. We've heard enough of India growth stories and we've heard so much about, all the data that you want. You can just ask ChatGPT and it'll give you. It can make a presentation on the topic that you want. Correct? So I won't bore you. I'll just take you through raw facts. And I'll talk things which I have, I learned from my experiences. I was in New Zealand over the last, in the last fortnight of December. And guess what I found? 20% of the tourists were Indian. So definitely we are traveling more. But guess who was working over there? If you've ever been to New Zealand or Australia, you realize everything shuts at 5. It's only the Indians who work till 10 o'clock, 11 o'clock in the night. We interact with a lot of global organizations across the world. First thing हम लोग क्या देखते हैं? वो organization में जाओ और Indian को पकड़ो. काम वही करेगा. आपका काम जो भी है करेगा वही. So what is India's biggest strength? Okay, what is India's biggest strength? Let's not confuse India's biggest strength with the stock markets. We'll come to the stock markets later on. I think but before that is the outcome. The workforce is the outcome. Our biggest thing is our cultural values. We all come from very stable families. I guess the divorce rates in India are one of the lowest in the world. What it does is, for me as a kid, I had a healthy family going up. No mental issues. We tend to underestimate that so much. People talk about arranged marriages and everything, but that's a very strong cultural point for us. Second, most important, it is the focus on education. Literacy rates in India are very high. Whether it is GCC, globally there are nearly 50,000 chartered accountants who are working outside India. Totally there are 4 lakh chartered accountants. And this is not just for chartered accountants, but doctors, engineers. From Silicon Valley to New York to London, you will find a lot of Indians who are contributing to a lot of global organizations. And what I see is we are moving up ahead the ladder curve as far as adding value is concerned. So the lower value addition jobs, which earlier used to find, the taxi drivers, it's not there. The quality of workforce that we are exporting is very, very high. So what's our biggest strength? Our biggest strength is our capability to provide skilled workforce to the world. That to me is our biggest strength. And it's an outcome of our education system. It's an outcome of our family values. There's so much that goes into it. So that's our real strength. So much so that we send $100 billion back home every single year. That is the amount of money that NRIs send back this. And I've traveled extensively in the region, and I can tell you there's not a single family office in the GCC region which doesn't have an Indian. Very soon, usually they're number 2, number 3, number 4, but very soon they'll be number 1 as well, reporting directly with the families. So we're trustworthy, our work ethics are very strong, and that to me is a big, big strength as far as, India is concerned. Let's go to, can we have the first slide, please? The topic today that I'm talking about is structurally strong, but cyclically weak. Okay? Structurally strong is a country. And, today, 67% of India's population is in the working age group, more than anyone else, more than China. China's population is declining, right? 67% of India's population is capable of earning. That's a very, very high number for a lot of countries. So what that means is that the dependency on, others to provide for you also keeps on going down. So we're going to be contributing to the global GDP, going forward. So this is the Sensex. How many people out here are invested in the stock markets right now? Okay, I'm not. This is the Indian stock markets. The Sensex started at a value of 100 in 1979. Today it is closer to 80,000. It's gone up 800x in the last 45 years, right? In dollar terms, it's gone up 61 times. That is if you had only invested in Sensex company. That's the level of how much has it compounded at. It's probably compounded at closer to 15-16%. In INR terms, in dollar terms also, these are the kind of returns that the Sensex has delivered. This is the Nifty, this is the small cap index, mid cap index, right? They've all been phenomenal wealth creators as far as this is concerned. So definitely long term, India will continue to do well. The markets will continue to do well over a long period of time. But then as John Maynard Keynes, who said that in the long run, we are all dead. So yes, long run we will do well, but we need to be this. A lot of times where I come, I hear, not now, maybe not in the past 3-4 years, but before that, everyone was always skeptical about depreciating rupee. Now again, the concerns have started in the last 2-3 months, but before that, nobody was worried of this. But historically, the INR has depreciated by close to 3%. Long-term depreciation rate for the INR. Do we really think that we being Indians and S&P has delivered something like 9-10% returns over that period? Don't we think that we can definitely make 13% dollar returns or 13% INR returns in India by using very commonsensical approach to investing? But as I said, very few have been able to make those kind of returns in India over a longer period of time. This is it. We're one of the fastest growing GDP in the country. We have the fastest growing economy in the country, and we're already the fifth largest economy in the world. And this only keeps on going up. Again, as I said, for the simple reason that 67% of our population is productive. We've already discussed this point. I'll not dwell too much upon it. The NRI diaspora. Are we aware that Indians globally are one of the highest earning ethnic group? In Germany, Indians actually are the highest earning population, or the segment. We earn more than what the local Germans do. We would be amongst the top 3 in US, in UK, in so many countries. Coming back to the point where today we are exporting more high-skilled workforce. In fact, the German consulate in India released a video where they said we are very, very happy with Indians. We go abroad and we don't create a nuisance. When you see an Indian, you feel safe. You know that he's a family guy. He's here to struggle. Most of the countries are welcoming of us. We do not go there and create anarchy. To me, that's a very, very big positive point. And in my travels, I have seen the more we travel now, the more we are welcome. You don't feel that, this is an Indian guy, is not going to tip you. I think we all know about, I don't want to get too much into politics, but we've had the biggest advantage for us has been our democracy. It's such an understated aspect of our country. We just take it for granted, right? Don't we take our democratic rights for granted? We just think. But look at around us. There are countries falling left, right, and center. Imagine if you were born in any of those countries. What would be the opportunities that would be there for you? Very little, right? So, 1947, when the Britishers left, not many would have given us a chance to survive as a democracy. But today we are. And I think if there are any developing country where democracy is strong, it is in India. Come what may. people keep on questioning whether, which party comes to power, we all have our this. But, at the end of the day, as long as democracy is functioning, we can progress. Also, another point about India is we are very, very moderate in terms of our thought processes, in terms of our religious beliefs. See, every country will have left-wing and right-wing and extremist and, this. But overall, as a country, we're extremely moderate. The democratic this forces us to be moderate in our thought process. When any economy or country veers towards extremism, that is the beginning of the downfall. So to me, that's again a very, very understated fact as far as India is concerned. So going forward, we're going to do well. We've done well. Since I started my career. When I started my career in 2001, the Sensex was at 2,800. Today it is at 80,000. It has gone up 30x, 25x over that period in 25 years. So all you need to do is, all I needed to do was do my SIPs, and I would have been far better probably. A lot more hair. Coming back to it. Yes, country is going to do well, excellent. Does that mean that you're going to make a lot of money out of stock markets? My answer is no. Why no? First, I want to take you to 1991, where the Sensex was at 4,200. This was Harshad Mehta Indian economy had just opened up and things were amazing. Global investors were coming to India. From 1991 to 2001, our economy grew at approximately 5% GDP. What happened to the stock market in 2001? Anyone here remembers where the Sensex was in 2001? The number was 2,800. So if you had invested in 1991 at a Sensex level of 4,200, the Sensex 10 years later was at 2,800. Did India do well? Fantastically. Because I passed out in 1991, so I know the 10 years were fantastic. The country kept on growing. If you take out the constituents that were there in 1991, right? The Sensex and Nifty constituents keep on changing. The likes of Infosys and Wipro and HDFC Bank got added to the Sensex somewhere in the mid-90s, and maybe the Shipping Corporation and Bharat Forge got out of the Sensex over that period. If you take the original composition in 1991, the Sensex from 1991 to 2001 lost 90% in adjusted for time value of money. In absolute terms, so it was down nearly 70%. Like for like. What went wrong? Same thing. Global financial crisis. The Sensex hit 21,000 in the heydays of December 2007. Over the next 1 year, the Sensex crashed to 6,700. It was nearly 70% drop on the Sensex. The small and mid cap indices corrected by nearly 80%. There are two things which are very common to both the events. At both the times, your market cap to GDP hit 150%. What happened 3-4 months back? Market cap to GDP in India was at 150%. You see the euphoria, right? Everyone around you is invested in the stock markets. Does anyone feel the euphoria as far as Indian stock markets enthusiasm is higher today than it was say 3 years or 4 years back? Does anyone feel that? Correct. And what have we heard? Buy when everyone is fearful and sell when everyone is greedy. So are people more greedy right now, or rather 3 months back, or are they more fearful? Right now fearful because the markets have corrected, correct? Everyone was bullish, everyone was greedy, right? So here, as I talked about this is what happened. Market cap to GDP, we had a big bull run, 2008 market cap to GDP, and then what happened during global financial crisis. This is the small cap index corrected by 80%. That's when, I learned that what is the meaning of a stock that has fallen 90%. A stock that has fallen 90%, what is the meaning? It's a stock that fell 80% and then half. So you could have bought a stock at 80% down and you could have still lost half your money. The first, we started getting a little cautious. As I said, let's not confuse the Indian economy with the stock markets. We're all going to, do well over the next 3, 4, 5 years. Our salaries, our bonuses are going to increase. If you're a businessman, probably we will see an increase in our profits and revenues. But let's not confuse, the economy and the stock markets are two different things. China's grown for the last 25 years at 8 to 9%, and the stock markets has practically delivered 0% returns over that period. So GDP growth rate in the short run or the long run does not necessarily translate into this, because there's a bigger underlying factor that comes into play, which is valuation. And 6 months back, I first pointed out that valuations in India are very, very exuberant. We started getting cautious. I said, it is ridiculous the kind of valuations that some of the Indian stocks are quoting at. Like 50 to 100 P multiples had become common. And me being a chartered accountant, for me, I want to buy stocks at less than 10 P multiple, right? But this is the kind of overvaluations that exists even in India today. What was the argument that people were giving by saying or trying to justify the valuation? The argument that people were saying, India is a growth economy. India is a growth economy. Fine, we're a growth economy, but that does not necessarily mean that you can bid up the valuations to the moon. No, that cannot happen, right? What happened? Typically, when everybody is making so much money in the stock markets, nobody wants to work. Everybody, right from Zomato drivers to everyone in the country, was in options trading. Everyone, as far as middle class is concerned, was busy doing their SIPs. I have had companies come and say, we're not getting payment from our suppliers because they're using that funds to apply to IPOs. That's true. I'm not making this up. And everyone thinks that, this is an easy way out, or this is an easy way to make money. No, stock market is not an easy way to make money. Historically, the Indian markets have delivered close to 13 to 14% CAGR. If you're getting anything more than that in the short run, and to me short run is 3 years, 4 years, then you need to reassess, go back and reassess whether these returns are sustainable or not. So, 6 months back, Somaniji, we stopped accepting funds. You talked about our returns. And when we stopped accepting funds, our 10-year CAGR was 35%. Our 5-year return was closer to 50% CAGR. And I said, these returns are not sustainable. So I said, we're not taking any more money from clients. So we stopped accepting funds into this, because I said, you cannot make, when you're buying stocks at, these kind of valuations, you cannot make money. The chances of you losing money. Right, we've learned this through and through, that valuations matter at the end. People were talking about 30-year growth rate for the company, and all of a sudden, the entire landscape has changed in the last 6 to 8 months with Zepto coming in and quick commerce and everything. It's a great company, DMart. But if you paid 100 PE multiple for it, you're already down 30-40% on the stock. And this is one of the best companies in the country I'm talking about. Imagine what holds for some of the not so well-run companies or businesses which don't have very strong moats. So first, 6 to 7 months back, we got worried about valuations and we stopped accepting funds. And we started creating cash. And then what we saw signs of slowdown as far as the Indian economy is concerned. Look, we've had fantastic growth rate, 5 years post-COVID. India's done exceptionally well. It's so much so that, 2 years back, 3 years back, when I wanted to come to, I used to come to GCC region, nobody wanted to invest in India. Nobody wanted to touch India. Everybody was gung-ho about US, China, every other market other than India. And 1 year back, the euphoria around India is second only or is very similar to what I saw during India Shining. So the valuations, again, as I said, so we're seeing signs of cyclical slowdown as far as the country is concerned. Automobile sector has seen slowdown. Right, December month was better because of heavy discounting, but otherwise, car sales growth this year has been closer to 1 to 2% for the industry. Banking sector is really struggling as far as deposit growth rate is concerned because everybody is busy doing their SIPs. Nobody wants to. 7% per year is boring. I want 7% per month. That's the mantra for most people. Correct? Everybody's forgotten their asset allocation plans. Most of you are invested, right? I want to ask you a question. Is your exposure to stock markets, particularly Indian stock markets, today higher than what it was in March 2020 as a proportion of your net worth? Yes. Logically, now forget everything else. Logically, what it should have been? Shouldn't have been higher in March 2020 and lower right now? Isn't it? Buy low, sell high. So first, question that. Second, what is your exposure to small and mid caps today as compared to what it was in March 2020? Is it higher today to small and mid caps? Right? Go ahead. See, I'm not I'm not judging anyone. I'm just trying to tell you, the small cap index in the last 4 years has rallied 800%. So after an 800% rally, should your exposure go down or should it go up? It does, right? Because the human brain is wired that way. And even I fight my own brain. मैं खुद की नहीं सुनता हूँ. So we are seeing, as I said, we are seeing signs of slowdown in various sectors. Whether it is banking, banks are struggling for deposit. HDFC Bank, which is the biggest bank in the country, had 1% deposit growth. Axis Bank had this. We are seeing stress as far as the MFI sector is concerned. For nearly 15 years now, we've not had an NPA cycle in India. The last NPA cycle was in 2009. So most people in India have forgotten what a non-performing asset is. Most banks have forgotten. We are beginning to see the first signs of the NPA cycle coming in. Steel, imports from China have gone up significantly. Cement, volume growth is tepid, 1 to 2%. Government spending has been down. So we have a newsletter. We'll have a link somewhere down here. It's one of the most read newsletters in the country. We're nearly 25,000 people who are reading this, where we go about stating only the facts, nothing else. There are no opinions in that. So, I'd recommend, and we were the first ones to point out way back in August that we are seeing signs of slowdown. Palm oil imports are down. Companies like Hindustan Lever, Britannia, Dabur are struggling. So we're seeing signs of slowdown, and we are seeing a market where valuations are very expensive. So long run, the markets will do well. Short run, I personally feel that it is better that you go back and reevaluate your asset allocation plans. Think hard. Don't let your emotions take. We're chartered accountants. We go by numbers. I said that, in God we trust, but I need data to back it up. So that's my only this. And it could take a long, long time if you invest at the wrong time. This is a small cap index. If you invested in the small cap index in 2008, 15 years later, your value would have been at the same level. So I talked about 91. I talked about, investing in small caps. It's a very, very, tricky thing to be investing. And I've made my career investing in small caps. And then people are coming and telling me today that, you're wrong and you don't understand small caps. And I said, okay, fine. At this point, I don't. So this is my closing remark as far as this goes. As Buffett says, be fearful when others are greedy, which people were 3 months back, and be greedy when others are fearful. How many of you were greedy in March 2020 and said, this is the greatest time to invest in the stock markets? I was scared. I'll be honest with you. I was scared. But then as I told you, I don't listen to myself. So I was invested. I didn't sell. So what we'll do is I'll close my this. I hope I didn't put any one of you to sleep, right? And we'll open the floor to questions. If you have any questions, I'm more than happy to answer.
Thank you. you, Siddhartha. By seeing the history of Sensex or NSE, the simple message is if you invest only in Sensex or NSE, your money is going to grow. There is no need of applying any mind. So what do you suggest? Should one pick up the good script or should invest in the index?
I think, thank you, Somaniji. And I think it's a very interesting question. For most people, I would say, don't get into the business of active stock picking. But again, as I said, as chartered accountants, I feel, majority of us have a tremendous ability to analyze financial statements. We understand no course prepares you more thoroughly for the stock markets than CA does. We learn everything. We learn accounting, we learn auditing, we know how to pick a hole in the balance sheet, we learn financial management, right? MBA has one whole this for this. We have only one paper, और उसमें हम लोग कहीं से भी कुछ भी पूछ लेते हैं, right? So my suggestion is, don't listen to anyone. If you can pick stocks on your own today, all the tools are available. You have screener, you have everything. As a CA, again as a CA, I'm saying, if you think you can do it, and if you have had, give yourself, say, 5 years, 7 years, if you're a young chartered accountant. If you can maintain your rationality, pick stocks basis numbers and not emotions, maybe. I've seen chartered accountants in small towns having portfolios of 500 and 1,000 crores. 500 and 1,000 crores. Small towns. Every taluka place you go to India, you will have a chartered accountant who will have a minimum of 100 crores of portfolio. I promise you that. I promise you that. I've seen, it is, it's phenomenal the way, chartered accountants sitting in small places are able to, do investing. And I have met a lot of them. I've met a lot of them from Latur to Beat to all other kind of, places. But for majority, my advice is always to put money in Nifty and, Sensex and ETFs.
Hello.
Yeah.
Sir, thank you very much for this insightful session and information. My question is particularly two-part question. First one is that, what's your take on the SME segment, NSE Emerge and BSC SME segment of the exchange, where all of the stock are traded at the very high PE, and what's your exposure on the same? Second question, after this, too much of the, you can say, things are standing, like conditions and you can say, for the IP regulations have been standing so many times. So what's your take on the future of this SME segments?
Okay. I'll give you an history or an anecdote. 9 out of 10 companies in India eventually delist. I wouldn't touch any of the SME stocks or this. For the simple reason, I'm not saying, we all hear about Infosys IPO getting devolved and, Infosys then going on to become a multi-bagger and creating a lot of wealth, but that's an exception to the rule. How many people bought Infosys IPO in 1993 and held on to it? So, look, having a public limited company comes with a lot of responsibility. Whenever you sell shares to somebody, you make them your business partner. How many of these companies you think are actually focused on creating wealth for you? How many of these companies think of you as business partners, as co-owners? And how many of the people investing in this think of themselves as co-owners? Majority of them are there for the listing gains. Majority of the promoters know this is a good market, let's raise the money and then let's buy a house. South Bombay is full of people who bought 100 crore flats through IPO money. So I'd be very careful. I don't invest in micro cap companies, and I would advise most people not to, do it. It's beyond you're sitting here, you don't know, what are the intentions of the promoters, and then we know that, only 1 out of 100 companies succeeds in the long run. So what is your probability? I'm sure there are going to be probably few big wealth creators out of that, but if I have to pick a needle from a haystack, my probability is very low. But go back to 2020. You could have thrown darts, picked stocks, and you would have made money. So you want to invest when your probabilities are higher, not smaller, not lower.
Thank you. Thank you very much, Siddhartha, for your
Thank you, guys. Thank you.